Hello, Paul McFadden here. So let's talk about using equity to create wealth through property. So a lot of people find themselves in a situation where they own their own home, and what's probably happened most likely over the last 10, 15, 20 plus years is that you've ran through a pattern which tends to happen with the masses, the majority of people. And I see this all the time because if we just rewind a little bit, what happens when we're in school? We're taught to work hard, and basically get good grades. And if we get good grades, we could hopefully go to college and then university, get a degree. And what happens off the back of that? We want to then go into the workplace, get a job, work up that corporate ladder. And as you're doing that, you're going to go out there and buy your first home. And then you start a family while you're working up that corporate ladder. And when you start a family, the idea is, well, you've got to buy your own home. And then when you buy your own home, what's been drilled into you from the years of past conditioning, especially from the banks and people who don't have the right financial knowledge and education, teaching you and saying that your own home's an asset, which we'll get to. So you start paying down your mortgage. And what tends to happen is that when you get into your late 20s, early 30s, you'll then maybe look to scale up and buy a bigger home because the family's grown. And then what happens when you buy that next home, this is the majority, that you'll, throughout your 30s into your 40s, have been paying down that mortgage, and you're probably sitting, my experience having dealt with many people, and this is a common numbers and stats that I see, you're sitting at what's called 50% loan to value. So you're probably sitting on a property that's worth 400,000. Now again, if you're in London, the values will be much higher. Further out, it just depends. But my experience is normally about, say, £400,000 of a home that they're living in, and they have paid down their mortgage where they've got a mortgage that's outstanding of about 200,000, which means they've got £200,000 of equity sitting there. Now, other people find themselves in a situation where they've been paying down their mortgage where they don't have that much left and they're almost mortgage free. This is like crazy for me to think that this is a goal for most people, is to be debt free, mortgage free. And that is a worthy goal if you don't want to do anything in life, but you've got to understand and think differently around money and debt. Debt is good if it's focused and put into something that provides a greater return than the cost of the debt. And this is how you can leverage and create a lot of wealth. And my job and what I teach at Property Protege and help many others do is to help people, maybe yourself watching here, to understand why using equity is the best possible thing that's going to help you expand and grow and create wealth. Think about it just in simple terms right now, and then I'm going to dig a little bit deeper and really help you understand why. And if you're watching this as an investor, then you should be really taking notes and taking this on board, because your ability to educate people who have equity in the property, who may become a preferred investor for you, looking for you to help them build wealth, and you're going to go out there and source property for them. You can make a lot of money, as will they too, by building a portfolio. Then your ability to educate them in how equity is the best form and cheapest form of lending out there. So what we need to get them to understand is equity is sitting in their own home. The first thing to get them to realize is their own home is not an asset. Your own home, because you're paying the bills, if you've got a mortgage, you're paying the mortgage, you're paying the upkeep, the maintenance, all of that stuff is coming out of your own pocket, which means it sits in the liability column of a profits and loss and assets spreadsheet. So really it's a liability. The only time it becomes an asset is if you sell that property sometime in the future and you happen to make a profit that's more and over and above anything that you've outlaid in that property. So while that sits in the liability column, how can you make your own home an asset? And the best way I know that you can do that, other than selling the property, is releasing the equity that you have built up. And you can get equity in two ways. One, by paying down the mortgage, which most people have. And two, we all understand capital growth, when property increases in value over time. And hey, if you've done a renovation in your property, you've probably increased the value even more, which means you've got that forced appreciation. So your property's worth a lot more, or more than it was when you first bought, providing you bought well at the first place and time has passed to allow that capital appreciation. So it means that you can quite effectively and very easily contact a mortgage broker. Don't go to the high street banks because they'll only offer you their product. You want to go to a mortgage broker who's got access to the whole of the market, who can understand your situation, understand your needs and what you're looking for. And they may simply just tell you to stick with the same lender, but to increase your mortgage. So going in this same example of having £200,000 of equity, they may say that with the same lender, based on your earnings, based on your eligibility, you can go and get £100,000 of that tomorrow. And I'm talking about at 1.5 to 3%. Think about that, 1.5 to 3%. Let's take it on the high side of 3%. That means for £100,000 of equity that you take out of your own property, it's going to cost you per annum, per year, £3,000 of interest payments. It's free money. It's free money, £3,000 at 3%. And interest rates have been at an all-time low, and we've got to take advantage of this. This is when wealth is created. This is when wealth really starts to really multiply and grow, when you start to utilise low interest rates. Think about it. Having money in an ISA, of all the places, you'll be lucky if you get 0.2, 0.5% return. So we need to start looking at equity. 3% in the high end, you're going to get access to £100,000 of your equity. You can use that money to go and buy one property cash, or you might want to leverage 2 other mortgages, and that gives you enough money to put down the deposits and the renovation costs and all the associated fees. And what you're effectively doing is taking borrowed money at such a small interest rate and putting that money into 2 other properties that become assets, because those 2 other properties will be buy-to-lets as an example, and then you'll be able to add them into your assets sheet on basically being assets. They're not liabilities. Why? Because there'll be other people who will rent those properties and pay the bills. And let's say those 2 properties, after you pay the mortgage interest rates, after you pay any associated fees for renting those properties out, such as letting agent fees and building insurance, you might be left on both of those properties £250 positive cash flow. So over 2 properties, you've now generated, if they're like for like, £500 a month positive cash flow. That's £6,000 a year. So start to think about this. This is an income that you're bringing in. If it costs you £3,000 a year in interest payments, yet you're making £6,000 profit, you've basically paid back your interest payments and you've got £3,000. But not only that, you've diversified, and that's key to creating wealth and having success in any type of industry. Because if there was a credit crunch and there was another recession and your property was affected and the property prices went down, then you're diversifying because you don't lose equity all in one home. You've diversified into other properties, which means you're lessening the risk. And you're still generating an income from those other properties. And more importantly, when it's the good times and you are getting capital appreciation, not only are you getting that in your main residence, but you're also getting that in 2 other properties as well. So you're benefiting from capital growth across 3 different properties, but 2 happens to be getting looked after by other people paying the mortgage, covering all the bills and generating you an income. So this is where we need to start changing our mindset and how we go invest and how we start to create wealth, leveraging what we already have at our fingertips. I meet many people, and if I don't have this conversation with them, they don't believe they've got access to any money. I hear this same thing all the time. Paul, I don't have money. I don't have some money in ISA, not a lot. I've got a pension that I don't want to touch, or they've got some funds, but never enough in their mind. And then when we start to ask them questions like, well, how much is your property worth? Do you have an idea? Yeah, it's worth X. And if you don't mind me asking, how much of your mortgage have you got left on it? Well, I've got Y. Well, do you understand that means you've got this amount? And on average, when I speak to a lot of people, they're sitting on average £150,000 to £200,000 worth of equity. And that allows them just taking 100 of that or all 200,000 of that to go and build serious wealth. And here's the best part. You can help them diversify further. They've helped them build a portfolio of 2 properties, and then the third deal they do, maybe it's a buy and flip. They buy, add value and sell, which means they're replenishing their money, and it's continuing to bring in lump sums of money while they're building a portfolio. And this allows you to really create long-standing generational wealth. So this is where we need to start thinking very differently in how we leverage the equity of our own home, because you could be there and be stubborn going, no, I want to pay down my mortgage. I don't want to touch that equity. You know, you can come from that place, but what you've got to understand is that the only person that is not going to benefit from this is you. It's you. And you've got to understand that if it's put to work in the right place, then it can generate significant wealth. And the key to here, if you're sitting there going, well, great, that's awesome. I'm open to this idea of releasing equity, but what do? I lack the knowledge. I'm not sure what a good deal is, how to structure things, you know, what about the markets and so forth. Then get the right education. You know, this is why it's good to watch and make sure you're subscribed to my YouTube channel, because as you're subscribed, we put out lots of content every single week that's going to help you understand, get in the know, get the right education and apply that. Or maybe go and look at our Property Protege program, which helps new people get started in a property journey who have got an interest and appetite to property and building wealth, to understand the step-by-step process on how to identify a deal, where to source it, how to identify, how to structure it, and more importantly, how to utilize your funds to create that wealth and build a portfolio or do buy and flips, along with a few other creative strategies. But ultimately, it's important for you to understand. And if you're watching this as an investor, it's your duty to really help, because think about it, it's your duty to help other people who are sitting in a situation where they've got equity to understand that with your help and support, you can help them build a portfolio and create wealth for them. And hey, a byproduct of that is you'll make money too. Everybody wins in this situation. And if you're wondering how you can help people and how you understand, again, Property Protege may be for you. So just to summarize and pull this all back together, we really need to start looking at how we interpret equity in a property. Because if it's sitting there doing nothing, you know, I see a lot of people who are so proud to turn around and say, well, I've paid off my mortgage. Well, good for you, but that benefits no one. It benefits no one. Because if you've paid off your mortgage, you've got a property sitting there with all that equity, all that money that could be utilized to build wealth, and you're not doing that, then what ends up happening is, God forbid, that comes a time where you pass on. Who inherits your property? Likely it will be your kids. And what will your kids do? They'll go and spend your feckin' money. So, wouldn't it make sense to create generational wealth so your kids can live off the portfolio and the income that that generates, other than being, you know, pleased as punch that you've actually paid off your mortgage? You know, that is not financial savvy. That's not good financial planning. So we need to understand how we utilize equity, get a bit of confidence and belief around yourself by understanding, hey, go and grab a copy of my book, Your Property Jumpstart, and get that on Amazon, or go to propertyjumpstartbook.com and I'll send you there for free. And that will give you the step-by-step process to understand and how you can get your start in property and start to utilize equity in the best possible method to build wealth through property. So again, I hope you've enjoyed this. If you've got any questions, then comment below. I'll be happy to take the time to answer those. And more importantly, make sure you're subscribed to the channel and follow along, because we put a lot of content, a lot of videos out there to help you in your journey going forward. So all the best, and I look forward to speaking to you again soon. Bye for now.